securities generally refer to stocks, which give investors shares of ownership in a company. In publicly traded businesses, the organizations sell these shares to the public to raise capital as an alternative to borrowing money. Two potential benefits that stocks offer are growth and income. If a company's market value increases based on company profitability or public expectation, shareholders may see that value reflected as an increase in the value of the stock they own. However, the opposite can also be true. If a company loses value, its shares may also decrease in value. You also run the risk of losing your investment entirely in the event of a bankruptcy or other financial upset. This danger, known as market risk, is inherent to the world of stock investing. While an increase in the profitability of a company is often indicated by a rise in value of its stock, its earnings may also be distributed among its shareholders in the form of a dividend. Dividends can be issued in the form of cash or as additional shares of stock, and typically in a fixed quantity per share. It is important to keep in mind that although dividends can effectively provide income, they are not guaranteed and have the potential to increase, decline, or even stop, subject to the financial success of the company or at the discretion of its management. This, along with market risk, are joined by a degree of credit risk, as holders of common stock are generally the last investors to be paid out in the event of a bankruptcy. Stocks are generally considered riskier investments relative to other alternatives, but some may consider this to be offset by the potential for greater returns. With an understanding of the risks associated with investing in the stock market, you will be better able to make informed investment decisions based on your current financial situation, short and long-term goals, and risk tolerance. To learn more about this and other investment topics, subscribe to the Zions Direct YouTube channel.